Hello, welcome to European Open Briefing for Wednesday, April the 18th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So we are seeing a bit of a rebound in the US dollar this morning. It's being boosted by improving risk appetite, as well as higher stocks on Wall Street. The euro and the pound, though, are retreating from their highs reached yesterday following some disappointing data. The Canadian dollar is also low this morning, though it did manage to jump to 2 months high yesterday ahead of a Bank of Canada policy meeting due later today. And the Australian and New Zealand dollars are also under pressure from the stronger dollar as investors await key data out of Australia and New Zealand early tomorrow morning. So now let's take a quick look at the major pairs and stock indices. We can see dollar index up, dollar yen is also up back above the 107 level. Euro and pound slightly lower. The Aussie and the Kiwi are seeing slightly sharper losses. So is the Canadian dollar at the moment. Gold is more or less flat, but oil prices are up this morning. You can see WTI crude just below the $67 a barrel level. We can see, though, in stocks, all of them are in the green. Yesterday, we had another positive close on Wall Street. Dow Jones, S&P both up around 1%. And although it was a mixed start in Asia, all of them managed to close up on the day. And in Europe, we were also seeing major indices rising at the start of trading in Europe. So let's now move on to the dollar. We can see dollar yen had been moving lower since Friday, but it staged a strong rebound late yesterday, early this morning, rising back about the 107 level. Dollar index is also up yesterday, though it did fall to a 3-week low before that rebound came about. So yesterday we did see better than expected US data, including building permits, housing starts, and industrial output for the month of March. Also, we have those geopolitical risks easing somewhat, and we're not seeing any fresh escalation in trade tensions between the US and its major trading partners, mainly China. So all of that is helping that rebound in risk appetite. Also, we are seeing reports that the U.S. Secretary of State nominee Mike Pompeo secretly traveled to North Korea to possibly pave the way for a summit between President Trump and Kim Jong-un, which is expected sometime in May or possibly June. Also, we have that summit between Trump and Japan's Shinzo Abe, and there were some concerns that President Trump might raise tensions between two nations by pressing the Japanese Prime Minister on a bilateral trade deal. But that's not looking likely. So we're not going to. So the fact that we're not likely to see tensioning relations between the two nations is also helping risk appetite. And of course, it's earnings seasons. That's why we're seeing big gains for U.S. indices. And now we have the Dow Jones, S&P 500, and the Nasdaq. All of them rising above their 50-day moving averages since that sell-off that triggered huge losses when those trade tensions escalated earlier in the year. Let's now move on to European currencies. We can see the euro has managed to, it managed to rise somewhat before falling back again. We can see that big slide yesterday, which came after Germany's EU Economic Sentiment Index unexpectedly fell to a 5.5-year low. The euro is currently trading around 1.2354. We've got the final Eurozone inflation readings for March later today, though they're not expected to show any surprises. Sterling yesterday surged to a post-Brexit high 1.4376 against the US dollar. before retreating following the release of the UK labour market report, which showed wage growth coming in slightly below expectations at 2.8% year on year. In the 3 months to February, expectations were for 3%, although we did see the UK jobless rate falling to a 43-year low of 4.1%. But I guess this was an opportunity for traders to take in some profit. We can see sterling currently falling below the 1.43 level to 1.4282. Though despite that data, most economists are still expecting the Bank of England to raise interest rates at its meeting in May. And we've got the UK March inflation numbers coming up later today. And so we're likely to see more volatility for sterling today and also tomorrow when we've got the retail sales numbers. Let's move on to the Canadian dollar. We can see the loonie rose to 2 months high 1.2522 to the US dollar yesterday, but we are now seeing a rebound in USD CAD. It actually came close to reaching the 1.26 level. The loonie has been boosted in recent days on optimism about a NAFTA deal, as well as, of course, from the higher oil prices. Yesterday, we saw a better than expected increase in Canadian manufacturing sales, so that further boosted the loonie yesterday. But the stronger US dollar this morning is the main reason why the loonie is weaker. We've got the Bank of Canada meeting at the decision is due at 14 hours GMT, so that could possibly help the loonie extend its gains. Although the Bank of Canada is expected to hold rates at 1.25%, they may possibly signal a rate hike at their next meeting in May. And finally, looking at the Australian and New Zealand dollars, both currencies had hit fresh highs on Friday. Aussie briefly broke above the 0.78 level, but the failure to close above that level led to the Aussie dollar pair losing its upside momentum. The same is true for the Kiwi dollar. It failed to close above the 0.74 level, and that is also retreating. Yesterday, we did see a bit of a boost for the Aussie from positive Chinese GDP numbers. Not much of a reaction, though, today after the People's Bank of China announced a surprise cut in China's reserve requirement ratio by 100 basis points. So that is an alternative way of easing monetary policy, an alternative way to interest rates, but there wasn't too much of a reaction in the Aussie dollar pair. We've got Australian employment numbers due early tomorrow morning, so we could see a possible boost to the Aussie if that data comes in positive. The Kiwi, though, yesterday we saw at the dairy auction dairy prices rising for the first time in 4 auctions, though that didn't do much to help the Kiwi. It's currently trading just above the 0.73 level. We've got New Zealand first quarter inflation numbers coming up at 22.45 GMT. It's expected to show a drop in inflation. If we do see a weaker reading there, we could see potentially further losses for the New Zealand dollar. And finally, looking at today's economic calendar, we can see we did have some Japanese trade data earlier, which we saw exports rising less than expected. Not much of a reaction on the yen there, as the yen is mainly down this morning on the back of rising risk appetite. We can see UK numbers are expected shortly, followed by Eurozone inflation and that Bank of Canada decision, plus speeches by New York Fed's William Dudley and Fed Governor Randall Quarles. That's it from me. Thank you very much for watching and have a great day.